Good afternoon, my butt huggers and my nut suckers. Welcome back to another episode in America's favorite TV show, Who Wants to Be a Functional and Profitable Economy? Well, spoiler alert in this episode, nobody wants to. This week, corporate earnings are slowing, AI hype is ballooning, Trump's slapping tariffs like Oprah handling out cars, and China's now investigating Qualcomm for, breathing air. Meanwhile, oil's down, rare earth stocks are up, Chinese tech is tanking, and the Dow dropped 600 points after Trump canceled his meeting with Xi Jinping. Because apparently foreign policy now runs on tweets, or should we call them truths, because he only truths now, even though everything he says is bullshit. And if that wasn't enough chaos, Connecticut's governor just warned that if the Democratic socialist named Zohran Mamdani wins the New York mayoral race, Wall Street might panic here. Imagine telling hedge fund managers their new mayor doesn't believe in yacht deductions. You'd think he'd propose banning cocaine and Patagonia vests at the same time. Now here's the big picture. Corporate America's profit growth is finally slowing. Analysts expect just 8.8% earnings growth for Q3, down from 13% earlier this year. Now, why is this happening? Because tariffs are back like a bad sequel. Tariff wars. The Trump awakens. Well, Goldman Sachs is currently saying custom duties jumped up 33% last quarter to $93 billion. That's like taxing yourself to prove a point. But do investors care here? No, they don't. They're too busy buying every AI-related stock like it's a golden ticket to Willy Wonka's liquidity factory, because that's what all they are, is exit liquidity at the end of the day. And guess what? It's working. The S&P 500 and NASDAQ hit new record highs because apparently slower profits now mean buy more tech. You know what they call that on Wall Street? Faith-based finance. Again, these are updates, so obviously we are not at all-time highs after that disgusting Trump sell-off that we saw. Shout out to him for tanking the market out of nowhere. Cool. Thank you for that. I think we all appreciated that, really. So, anyways, let's move on and talk about the Church of Artificial Intelligence, why don't we? Corporate America is spending billions on AI, and no one can explain what it does, but everyone agrees it's transformative. Like, it's crazy. AMD selling chips to OpenAI. Oracle's renting NVIDIA GPUs and losing $100 million. And while every CEO earnings call sounds the same, we're investing heavily in AI to improve synergies across our scalable cloud-based paradigm, because we would love to see this inflection happen for us and blah, blah, blah. And it's just like, dude, shut up. You all say the same thing and you have no products to really prove any profitability. Like in quantum right now, in quantum computing, the only company that actually should be turning a profit and should even be headed towards profit is Rigetti, and then obviously IBM, because they did create a quantum computer earlier this year. Now the market's now trading at a 23x forward earnings, way above the 10-year average of 18.7, and that's not investing, that's just spiritual optimism and investors huffing hopium like it's galaxy gas. Because the moment AI stops delivering miracles, those magnificent 7 stocks become the mediocre 7 very quickly. Now, meanwhile, the government's still shut down. 6 failed votes later, Republicans are starting to realize maybe threatening to cut healthcare during an election year isn't a crowd pleaser for people. Even Marjorie Taylor Greene said everyone's getting destroyed. When management sounds like the adult in the room, or MTG as we like to call her, that's not bipartisanship. That's a legit cry for help. The fight, expiring Affordable Care Act subsidies. Democrats want to extend them. Republicans, well, they have no interest in doing that. And Trump's threatening to block back pay for furloughed workers because nothing says fiscal responsibility like stiffing your own employees who work for you. Make it make sense, people, because this is making less and less sense as the days go on, by the way. And we also lose about 0.5% of our GDP. And we're in week 2, and guess what? GDP is tanking and lost a 0.2 percentage point hit every week the government is going to remain closed. At this rate, by Christmas, the economy will be held together by Chick-fil-A gift cards and optimism. And just when you thought things couldn't get worse, by the way, enter Donald Trump. He canceled his meeting with Xi Jinping and threatened a massive increase in tariffs on Chinese goods. Wall Street immediately said, cool, let's sell everything. The Dow fell 600 points, Alibaba down 8%, Tencent down 6%, and Baidu down 5%. Meanwhile, rare earth stocks like MP Materials jumped up 15% because apparently the market thinks geopolitical chaos means buy metals. Oil also tanked 3% because China and the US are now reenacting the Cold War, this time with EVs, lithium, and microchips instead of missiles. China's even launched an antitrust investigation into Qualcomm, accusing them of monopolistic behavior. Translation, you sanctioned our AI chips? Fine, we'll sanction your chips. This is no longer a trade war. This is an ego war and a dick measuring contest between two guys with micro penises. Two billionaires with nuclear economies playing 4D chess with the global supply chain right now. And just when you thought Wall Street, by the way, had enough problems, Connecticut's Governor Ned Lamont said the quiet part out loud. If Zohran Mamdani, a Democratic socialist, becomes New York's next mayor, it could shake the entire financial system here. You can practically hear the hedge fund panic. What do you mean? Higher taxes on us? Let's be honest, the biggest fear on Wall Street isn't regulation, it's a mayor who doesn't go to the same soul cycle. But Lamont's right about one thing. If New York sneezes, Connecticut catches pneumonia, because Wall Street's dysfunction is the only thing holding Fairfield County's yacht prices together right now. So let's go ahead, make like a condom, and wrap this thing up. Corporate profits are slowing, AI is eating cash faster than it creates value. The government's still on vacation right now, China's torching Qualcomm, oil's crashing, and Wall Street's afraid of socialists with a Twitter account. Welcome to America. Meanwhile, the S&P is at record highs because apparently chaos is bullish now. We've entered the golden age of irrational resilience where dysfunction is priced in and corruption is trending, and the only thing reliable is the closing bell at this point. See you next week, assuming we still have an economy at this point, or at least an AI that can pretend we do and act like a president. I'm Max Pitts. This is Trades and Gains. Make sure you like, comment, subscribe, leave your hottest take in the comments. What are we buying the dip on? Give me a stock that we want to buy the dip on. Also, make sure you go ahead and sign up for Investor Central Club. Feel free to join us over there because we have fun and we make money. No, I'm just kidding. But it is a fun time. You can learn a lot about options flow. We have analysts such as myself, Eric, and some others as well. So hope to see you guys over there. Hope you're all having a great week and hope you have a great weekend. And I will see you on Sunday for our